Hello and welcome to another update video about FETCH.AI. We will take a look at the chart here on the daily time frame to see if the market has reached any key levels and what are now the levels that need to be broken to the upside to indicate that an uptrend is starting. Is there still another chance for an uptrend? So that's kind of the stuff we're going to talk about here today. As you might know, we are taking a look at the charts from an Elliott wave point of view, which is a structured way of analyzing markets, and it is based on market sentiment. And on the FET chart, I'm interpreting the move to the upside from the November 2022 low as a so-called ending diagonal, pattern. And these ending diagonals, they are structures that are very fragile. Sometimes we don't get the fifth wave. They are not impulsive. So to explain the difference, in an impulse to the upside, we would likely get a very, very aggressive uptrend. We wouldn't see deep pullbacks. We wouldn't see an overlap between waves 1 and 4. So that overlap will be avoided because it is not valid in an impulsive structure. And an impulsive structure is just very, very easy to trade and to track. If you show a price chart to 5 analysts and you have an impulse, they will likely all tell you it's an impulse because it's quite clear. But if you're dealing with a so-called diagonal pattern, then you will get different opinions. You will get people who tell you it's an impulse. Then you will get people who tell you it's a diagonal. Then you will get people who tell you it's just a corrective rally, and we will get new lows. So that is why when we're dealing with diagonal patterns, we cannot really trust them. So we have to be careful here. The price has reached a key spot, which is here the area around 44.8 to 52 cents. These are two main Fibonacci levels that meet here in this area. The 100% extension level is based on a calculation of the first dip between March 2024 and August 2024. Because what we know is that if this is still bullish to the upside, then what we often get is that the so-called C wave, which is the third wave down here, we have A, B, C, that this C wave often has the same length as the A wave. And it points towards the 100% extension, 44.8 cents, And we've arrived there, really, We have arrived there. And now we're just watching to see if the market is actually turning around. So the thing is, though, there is currently no evidence that we have bottomed. So we are at a key spot, but without bottoming confirmation. Reward to risk ratio is obviously very good for anybody who's looking for maybe an entry to trade the next move to the upside. And it's basically now or never, because if the price doesn't find support in this region and really continues to drop further, then the yellow scenario will take over. I've decided to give the bulls still a chance here and to continue to track a bullish scenario. But once we get a decisive break below that 44.8 cent level, it is just too deep for a bullish scenario. Then I'm going to start to track really in depth the yellow scenario. I have to say, though, that structurally it looks a little bit more like the white scenario, even though this is a wave 4, which is very deep. But that's acceptable in a diagonal pattern. It's just not ideal. We're slightly below the norm, so slightly deeper than this correction should normally be. But it doesn't really fit into the yellow scenario from just talking about proportions here. I don't want to get too much into this. So that means we can still give the bulls a chance. The question is, what is now the level that the bulls need to break to the upside to indicate that a low of sorts has actually formed? And so far, I can tell you that the move to the upside from the recent low that formed here on the 11th of March, that is not convincing. It doesn't impress me. We haven't even broken above any of the previous highs. So what I would like to see at the very least is a break above the March high, which is located here. That level is at 77.6 cents. Everything down here, well, is considered noise. As long as we don't break above that 77.6 cent level, pressure is down, so that is really needed. And then once we get a break above that level, we can watch for the price to reach possibly the $5 to $6 area. This would be an ideal target range for the next wave up. But first of all, we need a reversal confirmation here. This correction has lasted a year. I think a bounce at least is due, but so far it's not visible. But I'll stay close to that. I'll keep you updated. Hope you liked the update. If you did, please hit the like button. leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.